Hey everyone, and welcome back to the channel. If you're looking to level up your trading game, you've come to the right place. Today, we're diving deep into one of the most fundamental and widely used tools in technical analysis, the moving average, or MA indicator. Trust me, once you understand this, your charts will start to tell a whole new story. So, what exactly is a moving average? Simply put, it's a line on your chart that smooths out price data over a specific period. Imagine taking the average closing price of an asset for the last 10 days, then doing it again for the last 11 days, then 12, and connecting those averages. That's a moving average. It helps us cut through the daily market noise and see the underlying trend more clearly. Think of it like a GPS for your trades, pointing you in the general direction. There are a few different types of MAs, but the two you'll hear about most often are the simple moving average, or SMA, and the exponential moving average, or EMA. The SMA gives equal weight to all the data points in its calculation. It's like a democratic average. The EMA, on the other hand, puts more weight on the most recent prices, making it react faster to new information. It's a bit more agile, like a sports car compared to a reliable sedan. We'll explore when to use which later on. One of the coolest things about moving averages is how versatile they are. They can help you identify trends, spot potential reversals, and even act as dynamic support and resistance levels. You might hear traders talk about the trend is your friend. Well, the MA is your trend's best buddy. It literally shows you if prices are generally going up, down, or sideways. Let's start with trend identification. This is probably the most straightforward use. When the price is consistently above a moving average, it often indicates an uptrend. Conversely, if the price stays below the MA, you're likely in a downtrend. It's that simple. If you see a rising MA, that's bullish, suggesting buyers are in control. A falling MA signals bearish sentiment, meaning sellers might be dominating. A flat MA, that suggests consolidation or a sideways market. Maybe a good time to sit on your hands and wait for a clearer signal. Now, let's talk about period settings. This is where you customize your MA. Common periods include 10, 20, 50, 100, and 200. A shorter period, like a 10 or 20 period MA, reacts quickly to price changes. It's great for short-term traders or scalpers who need fast signals. A longer period, say a 50 or 200 period MA, is much slower and gives a broader, long-term perspective of the market. It filters out more noise and is perfect for swing traders or investors looking at the bigger picture. Imagine trying to see the forest for the trees. Longer MAs help you do that. Another powerful application is using MAs as dynamic support and resistance. Instead of fixed lines, MAs move with the price. In an uptrend, prices often pull back to a rising MA and then bounce off it, using it as support. It's like a spring mattress. Prices push down, but the MA pushes back up. In a downtrend, a falling MA can act as resistance, pushing prices back down after a rally. These interactions can give you fantastic entry and exit points. When price respects an MA over and over again, that MA becomes a significant level to watch. But wait, there's more. Moving average crossovers are another popular strategy. This involves using two or more MAs of different periods. A classic example is the golden cross and the death cross. A golden cross occurs when a shorter-term MA, like the 50 period, crosses above a longer-term MA, like the 200 period. This is generally considered a strong bullish signal, suggesting a potential long-term uptrend is beginning. Conversely, a death cross happens when the shorter-term MA crosses below the longer-term MA. This is typically seen as a bearish signal, indicating a potential long-term downtrend. These crossovers don't guarantee outcomes, but they're powerful indicators of momentum shifts. It's important to remember that no indicator is 100% perfect on its own. The MA indicator works best when combined with other tools and your overall trading strategy. For example, You might use it with candlestick patterns, volume analysis, or other indicators like the RSI or MACD. Using multiple confirmations can significantly increase the probability of your trades working out. It's like having multiple witnesses to a story. The more confirming evidence you have, the more confident you can be. A common mistake new traders make is using MAs in choppy, sideways markets. In these conditions, the MA can give a lot of false signals, leading to whipsaws and frustration. That's why it's crucial to first identify if the market is trending or ranging. If it's ranging, you might want to switch to a different strategy or wait for a clear trend to emerge. Also, don't just blindly follow every cross or bounce. Always consider the larger market context and economic news. The MA is a guide, not a crystal ball. So, how do you start using the MA indicator? Most charting platforms will have it built in. Just search for moving average and you can add it to your chart. Experiment with different periods to see what works best for the asset you read trading and your personal trading style. A 20-period MA might be great for one stock, while a 100-period EMA might be better for another. Practice on a demo account first, backtest your strategies, and see how the MA behaves historically. The more you practice, the more intuitive it becomes. Remember, the goal isn't to predict the future perfectly, but to increase your probability of success by understanding market dynamics. The moving average is an incredible tool for gaining that understanding. It simplifies complex price movements into clear, actionable insights. By learning to read its signals, you're arming yourself with a powerful advantage. I hope this deep dive into the MA indicator has been incredibly helpful for you. If you learned something new or found this video valuable, please hit that like button. Don't forget to subscribe to the channel for more trading tips and strategies, and ring that notification bell so you don't miss out on our next video. We love hearing from you. So, leave a comment below with your favorite MA period or any questions you might have. Thanks so much for watching, and happy trading.